Can you hear me? Can you hear me now? 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 I need your response. I want to be sure you guys can hear me. Can you hear me? All right. Morning. Thanks for joining. How has it been? How has been trading? So if you have any question, we're not going to spend much time. You can see my laptop battery is low. So we're just going straight to business. If you have any question, please drop it in the comment section. If there's any chart you want us to look at together, please drop it in the comment section. So let's start with GBP/USD. As you can see, GBP/USD has been bullish since Monday. Today is Thursday. GBP/USD has been bullish, and liquidity has been cleared at this previous high. If you join the weekly market outlook session, I told you guys my expectations on GU. Though my bias was bearish on GU, I was expecting price to clear liquidity residing at these previous highs. Okay. Though my bias for the week is sell, I was expecting liquidity to clear these previous highs, and that's they have achieved. So I'm looking out for a sell opportunity today and tomorrow. Okay, but the setup is not, there is no clear setup for sell right now. As you can see, we don't have a strong bearish pattern. This pattern formed yesterday after the release of after the FOMC meeting. After FOMC meeting, and I believe a lot of retail traders would have jumped in to sell after the formation of this bullish shooting star. A lot of retail traders would have jumped in to sell, and where would they have their stop loss? Their stop loss will be residing at this high. So there's a high probability the liquidity residing at this high will be cleared before going bearish. So that's what I'm looking out for on GBP. Okay, so I'm looking for a sell, waiting for a bearish reversal pattern to form. If after the close of this bullish reversal pattern, the next candle had closed bearish, as you can see, the current candle is still bullish. Today's candle is still bullish. If it closes bearish, then that will be a valid confirmation to sell. As you can see, the current candle for the day is bearish, is bullish, sorry. And if you go down to 4 hour,
effect, type in slideshow. So many slideshow effect, but I'm talking about
to 4 hour time frame. Whatever you're seeing on 4 hour must align with the daily time frame, right? It must align with the daily time frame. So what are we seeing on the daily? Sorry, on 4 hour. What are we seeing on 4 hour time frame? Let's go to 4 hour. 4 hour should be bullish also. So it's not be wise to buy. For some of you would want to jump in and start buying, but look at where price is. This is where price started going bullish. Okay, this week. Why would you want to buy at this point? For me, I think it's overbought. I think price is at overbought area at the moment. This is where you ought to have joined. And the market is currently trading. If you had bought from this point, the market is currently trading, I think, above 80 pips. This is where you should have joined. This was Monday candle, Monday. Okay, you should have bought from this point, and you can see the market is 80 pips above that level. You cannot be buying from this current market price, though there's still a possibility for price to keep going up, but it will not be wise for you to buy at this price. That's my take. Been buying, you should wait for price to pull back. As you can see, a fair value gap has been created here. A fair value gap has been created here. Also, there was a breakout from this resistance, and when there's a breakout from the resistance, there's a high probability that price will pull back to that resistance. If you are considering buying, you should wait for price to pull back to this resistance. And here also we had a fair value gap. This is the area you should consider buying, and not this price. Are you getting it? So that's my take on GU. I'm looking for a setup between today and tomorrow. I hope that is clear. That's my take on GU. Let's just see what's happening on 1 hour. And okay, this is 1 hour, still bullish also. 15 minutes, still bullish also. So everything is still bullish on GU. It's still bullish, but like I said, it's not the right time to go bullish on GU. Okay, so that's my take on GU. Which other pair do you want us to look at? Please drop it in the comment section. Let's look at gold. Gold has been bullish for some time. Yesterday, it sold after the release of, what was it called? After FOMC meeting, it sold. Well, my bias for gold for the week is bearish. But gold has not given me a good setup for sell this week. It hasn't given me a good setup for sell this week. But I'm still looking out for sell on gold. Don't buy gold at the current market price. Don't buy gold at the current market price. This was, okay, this is the weekly. Last week was strongly bullish, and this week also stayed bullish. Let's go down to daily. What's happening on the daily? So you can see yesterday candle after FOMC meeting. They just use FOMC meeting to manipulate and, deceive traders. A lot of people would have jumped in to sell. This is a shooting star, and their stop loss will be at this high. So it's possible they would hunt for the stop losses residing at this high before going bearish. If this candle does not break this high, if this candle, the current candle, does not close above this high, that's today's candle, then you should look out for sell opportunity on gold. Wait for the next candle to close bearish before you sell. Let's see what's happening on 4 hour. Okay, this is 4 hour. So there's a high probability they're going to come clear liquidity residing at this high. There is a high probability. But if this 4 hour closes bullish and the next 4 hour candle, this 4 hour candle does not break this high, if the next 4 hour candle closes bearish, you could consider selling gold. You could consider selling gold. Are you with me? If the next 4 hour candle closes bearish on 4 hour, then you should also go down to 1 hour or 15 minutes time frame and ensure there's a shift in market structure on 15 minutes. 15 minutes, there should be, if there's no shift in market structure on 1 hour, there should be a shift in market structure on 15 minutes time frame. And it's possible after a shift in market structure or before the shift in market structure, a fair value gap will be created. You could wait for price to pull back to that fair value gap before you sell, depending on the market risk. If the risk is not much, if it's not that high, market price from your entry price, you can still go in and start selling without waiting for price to pull back to the fair value gap. But if the risk is much, if the market risk is more, that is the difference between your entry price and where you're going to set your stop loss. If it is high, then you have to wait for price to pull back, fill the fair value gap before you go bearish on gold. I hope that is clear. I hope that is clear. Okay, so let's move to the next pair. Which other pair do you want us to look at? Let's look at Euro Aussie. Euro Aussie, I'm looking for a buy opportunity on Euro Aussie. My bias for Euro Aussie this week was bullish. As you can see, it's been bearish. It's been bearish. I took a trade, and that trade is my SL on Euro Aussie. I took a trade on Euro Aussie. I took a trade on Australian dollar USD. Euro Aussie, I bought. Australian dollar USD, I sell, and both trade. It's my SL. It's my SL. My bias still remains bullish for Euro Aussie and bearish for Australian dollar USD. So I'm waiting for the right time to execute the trade. Okay, so on Euro Aussie, what do I see on Euro Aussie? Let's go down to daily. So on Euro Aussie, you can see price currently just filled a fair value gap here, as you can see. price just filled this fair value gap. There's a fair value gap here. Okay, price just filled this fair value gap. So I'm waiting for the current 4-hour candle to close. You can see this fair value gap. So this pullback could be to fill this fair value gap. As you can see, the market is currently trading few pips below that gap. So it could just keep dropping. Okay. As you can see, we still have a lot of fair value gaps here. Can you see?
Yeah.
We still have a lot of fair value gaps here. So price could just keep dropping and come down here to fill this gap. But after filling this fair value gap, if a bullish reversal pattern forms, I'm going to risk buying Euro Australian dollar. If a bullish reversal pattern forms after this gap has been filled, I will buy, and my stop loss will be this low. I will set my stop loss this low. If this low is clear, then we should expect price to drop down to this next fair value gap. This fair value gap below. Okay, so my stop loss will be at this level, this level. Okay, so you just have to accept that you'll be wrong. Sometimes some trade will go against you. Don't try to fight the market. Don't try to fight the market. That's why I love trading. You have the opportunity to set your SL, decide how much you want to lose in the market. Okay, so once the market hits your SL, just close the trade and wait for the next opportunity. Don't fight with the market. The reason you're struggling with the market or struggling to make profit consistently is the fact that you're fighting. That's the reason you're fighting with the market. You lose a trade, you go in with higher lot size, and before you know it, your account is gone. Stop fighting with the market. The market would always be right. The market would always be right. Take that small stop loss and wait for the next opportunity. Every trader experiences losses. Your strategy would not make you profit in every market condition. Know that. Your strategy would not make you profit in every market condition. So be ready to take some hits, be ready to take some losses and be comfortable with whatever risk you're taking in the market. I hope that is clear. So that is my take on Euro Aussie. I'm looking for buy. Let's see 4 hour. Let's see what's happening on 4 hour. So the previous candle, you can see, looks like an hammer, but not a valid hammer. So I'm waiting for this current candle to close. If it closes bullish, if the current candle closes bullish and there's a shift in market structure on 15 minutes, I will go bullish on Euro Australian dollar. Okay. Shift in market structure should occur. I think I will go in at this point. Yeah, this high. Okay, this is where 4 hours should close and price should also close above this high. This is where I would be considering going bullish on. Okay, let me mute everyone. Maybe there's noise in the background. Please let me mute everyone. I can hear someone. I hope you're following. Any question? If you have any question, please drop it in the comment section. If there's any pair you want us to look at together, please drop it in the comment section. So that's my take on Euro Aussie. So 4 hour candle should close bullish and price should close above this high. And if price closes above this high, my SL, I'm going to set my SL. Let me see the risk involved here. Let's say price closes above this level and my SL, the risk is high. The risk is high. Is about 70 pips. This is about 70 pips. Okay, we'll look at USD card in a few minutes, Mr. DG. So this is about 70 pips. Not too bad, 70. My first TP will be at this is like 1-to-1. Okay, so that's my take on Euro Aussie. Let's see USD card. Okay, USD card has been in a range for some time, and yesterday after FOMC meeting, they did some wonders. Okay, price did some wonders yesterday, FOMC. That news is a news one needs to avoid, FOMC. FOMC, they always use FOMC to hunt for stop losses. One needs to avoid trading FOMC. Okay, so my thoughts on, okay, let's start with the weekly. So here we had what looks like an hammer, the next candle closed bullish. So we expect USD card to be bullish. That was my expectation on USD card this week. Because if we go down to lower time frame, I think this pullback is to fill the fair value gap that was created here. That's what I think is playing out in the market. The current bearish pullback is to fill this fair value gap. Let's go down to daily to identify the fair value gap. So on a daily, okay, you can see the fair value gap on a daily. Can you see this gap here? So probably price wants to fill this gap before going bullish. That is what I think would play out on what's it called, on USD card. So if this gap gets filled and a valid bullish reversal pattern forms after this gap gets filled, then you could consider buying. You could consider buying, okay? But also ensure that, sorry, I don't have DXY charts. I don't have DXY chart on my laptop. Also ensure that DXY is bullish before you, please ensure DXY is bullish. I'm trying to check my chart on phone, DXY on phone. Okay, at the moment, DXY is bearish on 4-hour and also on daily. DXY is bearish. So patiently wait for a bullish reversal pattern to form on DXY before you go bullish on USD card. Okay, ensure that DXY is bullish before you go bullish, right? Yeah, before you go bullish on USD card. Ensure that USD card, DXY is bullish before you go bearish on AUD, USD, GBP USD, Euro USD, and New Zealand USD. Ensure that DXY, please always check DXY, please. DXY right now is bearish. It is bearish. So we have to patiently wait for DXY to be bullish before we buy USD card. I hope that is clear, Mr. Deji. That's my take. Let's go down to 4 hours and see what's happening on 4-hour time frame. So you can see on 4-hour time frame, this is the gap we identified on the daily, but on 4-hour, this will be the fair value gap on 4-hour. As you can see, this will be the fair value gap on 4-hour. So there's still enough space. You can see below, you can see. So it's likely going to fill this gap, okay? But if a bullish candle on this is 4-hour, if a bullish reversal pattern forms on 4-hour, if a bullish reversal pattern forms on 4-hour, it means that your stop loss, if you are buying from this point, it means your stop loss should be below this level because there's a high probability they will come to this level. They will push price down to this level. So you would ensure that your stop loss should be below this level if you are buying. Let's assume after the close of this 4-hour candle, the next candle closes bullish, we decide to buy. Let's assume the next candle closes at this point. Then our stop loss should be at this level or a few pips below this level. I always advise that you set it a few pips below this level because it can come for this level. So your stop loss should be at least 10 pips below this level. And if price goes bullish, there's a high probability they will come for liquidity residing at this high. So if you are setting your stop loss, you're setting your stop loss at 55 pips and you are going for, this is about 98 pips, close to 100. The risk reward makes sense. So the risk is worth taking, right? You are risking 50-something pips to make close to 100 pips. That's a good risk reward. So that's my take on USD card. USD card. I hope that is clear. Is there any other pair you want us to analyze? Please let me know in the comment section. Let me know in the comment section. If there's any pair you want us to look at together, please let me know. Let me know. Which of the platform do you prefer? You prefer this platform or YouTube? YouTube it's been messing up for some days now. That's why I had to switch to Zoom. Any question? Any question? Let me know in the comment section. If you have any question, let me know in the comment section. DXY is on, what's it called? Is on TradingView. DXY is on TradingView. It's on TradingView. Any other question? Mr. Wade, Mr. Joseph, Michael? Any question? Any question? Any question? Any question? Any question? No question? That means we can end the session. Any question? Any question? You're welcome, Mr. Deji. You're welcome. I appreciate you for joining the session. I appreciate you for joining the session. Any question? You have any question, please let me know. Yeah, we learn every day. Yeah, we learn every day. The learning continues. We learn every day. We learn every day. The market teaches you, you know, something every day. You just have to be open-minded. Every failure in the markets should be a lesson. It should be a lesson, okay? That's why I love trading. It affords me the opportunity to learn something new every day. And he said that the day you stop learning is the day you start dying. The day you stop learning is the day you stop making good money. You know, so keep learning, keep learning. So I think that'll be all for today's session. If there are no questions, that'll be all for today's session. All right. All right. I wish you all a profitable trading day. Please ensure you apply good risk and money management. Please apply good risk and money management. Slow and steady wins in this game. Slow and steady. Don't try to flip your accounts. Don't give attention to those influencers on Instagram, on social media. They are influencers, they are not traders. Okay? They are influencers, and they are not, if not for you guys, even I would have gone off social media. Stop sessions like this. But I just have to show up. I just have to show up. Okay? All right, guys. Bye for now. All right, Mr. Joseph. Later.